in your book, and it's How to Invest by David Rubenstein. Those are watching the YouTube here. It's a great read. I've gone through it a couple times. You talk about the 3 different categories of investing that you learn, that you use, and then also from investing. You got the mainstream, the alternative, and then the cutting edge. You spend a few minutes. There's people here want to invest. They'd love to be the next David Rubenstein.
Historically, there are investments were in a category that we now call mainstream. It was stocks and bonds and some real estate. And that's what people mostly did, stocks and bonds and some real estate. In the 1970s, a new area came along, and it was now called alternatives. But that includes buyouts, venture capital, growth capital, distressed debt, opportunistic real estate, which is higher, I'd say volatility real estate, and maybe higher return. And so that's what people did to get higher rates of return. And now we have things I call it the cutting edge, which are very, very risky, potentially great upside, but not for everybody. An example of that is cryptocurrencies.
Right.
I interviewed a person for the book who made a lot of money in cryptocurrencies. He's obviously made less recently, but still he's way ahead. Or another thing might be ESG. ESG is a type of investing where you focus on environment, social, and governance kinds of concerns. So there are different kinds of things. For the average person, the best thing probably is to buy an index fund, because if you're a doctor, you're a dentist, you're a real estate person, you don't have time to really follow the markets minute by minute, hour by hour, and give your money to somebody who really knows what they're doing. I'm not in the business of taking that kind of money, but I'd say somebody that does stock investing or fixed income investing, an index fund with very, very modest fees. There are plenty of those out there. For somebody who wants to be an investment professional and younger, I encourage people to do it because it's a good profession, and also you're doing something good for society. If you're the venture capitalist who put money in Moderna, and Moderna came up with a COVID vaccine, you've done something useful for society. So I think investors get a bad rap when people think they're just greedy. They actually are doing something useful if they do a good job.
Especially if you get real good companies who've done a good job and continue to do so. I know you just recently interviewed Warren Buffett, and he's had such a big impact. What did you learn from him?
Well, he's a lot smarter than I am, is one thing I learned. I also wish I could have his genes. He's in his 90s and he's in good shape, mentally very sharp. But what he also preaches is buy something that you know something about and hold on to it. When you sell repeatedly, you are basically doing a lot of transactional costs kinds of things, and you're also paying a lot of taxes. If you hold on for the very, very long term, things will appreciate and you're compounding more money more efficiently.
Well, he's definitely been a foundation for, I think, establishing a lot of reason into the market. Obviously, he's invest in what you know, invest for the long haul, hold. You don't lose money when you sell. When people get nervous, I get greedy. When people get greedy, I get nervous. All those kind of great principles. Thanks for watching. If you want more tips on how to think, feel, and do better, check out these videos too. Oh, by the way, don't forget to subscribe to the channel and leave us a like if you enjoy the content.